Hello, everyone. Happy 2025. Happy first day of trading. How is everyone doing? Been up since 2 a.m. Already been to the airport and back. So it's been a long morning already. But good morning, everybody. Good morning, Jacob. Happy New Year to you. And I hope everybody, I agree with Mark, have a peaceful and profitable year. Thank you for putting that in, Mark. Thank you. We got the jobless claims. Thank you for putting in the news. Good morning, Sterling. Good morning, Patrick. Good morning. Happy New Year, Royal Palms. How do I normally approach the first few? I think that means trading days of New Year. Well, it all depends on when the holiday falls. So this year, we're still gonna get low volume, unless something really weird happens. Today and tomorrow, lower volume. I'm going to be really focused on when we come up with next Tuesday. Why next Tuesday? Because again, people are still traveling and recovering, getting back into Monday. But Tuesday, once we start getting the ISM, that's when I'll really start to see how the markets are more so going to react. I take the time around the holidays anyways with a little grain of salt. So now if there's a pattern that's already triggered, or the probabilities from sorry, I'm just tired. From the harmonics of those are the probabilities I'm going to play, but I'm not going to be super aggressive with stuff until we're back into a normal volume market. By the way, trucks using Terra and deliveries. Yeah, Tesla's fourth quarter delivery came in at, I'm just looking at my other screen, 495, 570, missing estimates of 512, 277 just came out. Good morning, John. Good morning, Eric. Good morning, Anissa. Hello, Charles. Good morning, Heinrich. Hope everyone, again, for the people coming in a little late, Happy New Year to you. And again, to reiterate what Mark says, have a peaceful and prosperous new year. All right, let's get right down to it. This is not going to be another super long session. The markets are up pretty green this morning, going into pre-open off the European opening rally. So that's where we sit right there. We had the initial and continuing jobless claims come out, 211 versus prior of 219, so drop versus prior and a drop versus consensus, and a big drop in continuing. Consensus was 1890, prior was 1910, and this coming in 1844. So jobless claims much lower, mortgage rates popping. But again, is this going to really shake the market today? No, it's not going to either way. What else do we have? We have the EIA numbers. Since yesterday was a holiday, the EIA numbers come out today for crude traders. And we got some 408-week bill auctions. We also tomorrow have the ISM manufacturing, but still very quiet. Now today, there's Tesla down. It was green before, but now it's red after the delivery miss, more so than the Tesla blowing up in front of the Trump building in Vegas. And we have Apple down, but everything else is pretty green. There you go, Broadcom. Buy Broadcom. That's a joke. Everything green in the sectors. Fed watch still is 88% for a pause. Remember, January 9th, we'll cover that again next Thursday. We have limited trading hours, and you can go here and see, your crypto and your some things are normal, and like energies are normal hours, but equities, the CME Group U.S. equities futures close at 8:30 a.m. Central Time on the 9th, and interest rates close early. So, because the stock exchange is closed, so they'll be open for European trading and then closing early. So keep that in mind next Thursday, a week from today. Still in fear mode. Brett still stinks completely. It's just horrible. You have very few companies lifting everything and show a very expensive market. From the start of year with a market this expensive, the only time the market really outperformed was 1988 and 1999 in the dot-com bubble. So you're hoping after, You know, the last year of really good returns, you're hoping based off the PE multiple being this high that we're going to go into another more bubbly than we already are. By the way, earnings today, you only have RGP and Lifecore after the close. All right. Happy New Year, Daniel. Again, Happy New Year, Charles. All right, so what are we looking at? Those levels, remember we talked about them. Little rally up, just barely missing that key resistance level, coming back down on Tuesday and holding, dipping down briefly below with the European Open and then rally back up, trying to spike above that key level and coming back down. Now, what am I watching for today? If we get, you know, a rally and start getting above this 59.86 and can hold that as support, the next cluster area I'm really paying attention to. The next key cluster area I'm paying attention to is 6,009 to 6,017 as very major resistance. That's the prior single candle breakdown zone right here. It's the 50% retracement from the sell-off to the European spike low. And it's also back to the prior 37.5 harmonic and the 50 EMA on the 4 hour. So that's a very key area I'll be watching if we continue, if we rally today after the open. If we roll over, we still technically, based off the daily close on New Year's Eve, we should still see, not guaranteed, but the probabilities have shifted that we should still see at least trading to 58.96 or lower. So this actually has to get a pretty strong bounce on before it will invalidate that. So I'll still be watching for rollover plays. And remember that 6017 is where the 50 EMA on the daily is and slightly in the rotation zone. You can see where the rotation zone in 50 is. That's where I'm watching for very key resistance on any bounce. Again, the key support, really pay attention to this 59.26 area, because if we start breaking down below there, then I'm targeting that 58.96 to 58.66 area. Also, remember, we still do have a potential double top in play. So, should we trade like it's 1999? I'm not trading like it's 1999. I'm not putting all my eggs in the cocoa basket. Not with the weakest insider buying, like in years, and massive insider selling with a super expensive market and insiders aren't buying it and they're on the sell side. You know, there'll be trades to the long side, but it's not just put all your eggs in the long basket and go home for the next year and wake up on December 31st in 2025 and say, how'd I do? That would not be at least my game plan. Remember, back on Monday, the NASDAQ closed just below 62.5, shifting the probabilities, and it already tagged out that 87.5 where it's bouncing from now. Does not mean I won't still be watching for rollover plays, but we already hit that 87.5 on the spike down opening. All right, so the key area for the NASDAQ that I'm paying attention to is this 21,500 roughly, 21,492 to 21,500. Then above there would be about 21,600, 616 to be exact. But again, I'll be watching for rollover plays. I'm going to keep an eye on this rotation zone, because if you look here, this is now this is a lowering level right here, and it's already spiked up there. So if it gets through that, it will get through the rotation zone on the 4 hour and this little key resistance level. And then I'd be watching for that 50% retracement level. Other than that, I'll be focusing on potential rollover plays. And overall, we still have the potential double in the NASDAQ that could trigger on a bigger basis and even take it back to the 200. We will have to see. That's what I'm watching for into next week to see if that triggers. The Dow, we do have a potential double bottom. Looks like the rotation zone would be out of the way if it triggers. Also pay attention to the Dow in regards to Thursday's highs. Now this again, lower volume. I'll take it with a grain of salt, but I'm going to be keeping an eye on the high of I should say Tuesday, because that would technically be a percent B buy play if it can follow through. It would probably only be an intraday thing for me, since it is going against the rotation zone and the first target's actually right there. So, but I am paying attention to that, especially if it does trigger, and then we can get a little more continued strength. The only very bullish setup potentially is in the Dow right now, and it may never trigger. Russell, you do have, I should go back on my prior statement. The Russell and the Dow both have potential double bottoms. However, the Russell's already hit the first target of the double top. Now, would this, if it triggered this double bottom pattern, would it invalidate the double top after hitting the first target? No, it would not. It could come up right to that 62.5 and roll over again if it were to trigger. That's the only thing I'm keeping an eye on with the Russell. Other than that, very major resistance is 22.98 and very key support is 22.24. So that's what I'm watching for there. Coco's still bullish. Happy New Year, Coco. The VIX. The VIX, not much going on right now. So nothing to focus on there. The DAX, again, pay attention. Very, very major resistance is 20,165. Very key support is this 19,925. That's going to determine things. I'm now going to be watching for potential rollover plays, unless this can break out and then really power through 20,284. The notes, futures, again, it's going against the rotation zone. We're getting back to cycle top, so I'm going to be watching for potential rollover plays in that. And in the yields, going to be watching for bottoming plays. We did have on the break earlier above Tuesday's highs. Could have been a percent beat buy, but could not sustain that. I'm still paying attention for the rest of the day through about with Tuesday's highs, because if it does move back up in yields, we have a percent beat buy and a rotation zone buy. Remember, the target's still 4.7. What else? Dollar index. Again, we talked about this. Rotation zone catching up. I was watching for the breakout and starting to break out. Little nice move on Tuesday, following through on Wednesday. We still have the key target, this 108.80 area. Then if we close above 108.85, it then triggers, keep in mind, it triggers the 62.5% rule. So we could continue to see higher for longer dollar index and potentially target the October 22 highs. So I'll be really then focused on pullback plays unless something shifts. And the only thing that would really shift it for me in the short term is if we close below the daily rotation zone. Crude also breaking out. Look at this. It's Tuesday, closing right around the November highs, and then today following through. Also well above the 62.5. So we could at this point, if we do close above that, easily see the mid 75s again. So very interesting. Crude building a strong base. Remember when we kept seeing that bid in here, the underlying bid, and then it just kept building and building, and now it's breaking out higher. Very, very fascinating with crude right now. Now, is that a long term? No, because we're still in a major, major consolidation range that we've been in for, I mean, technically, between the September lows and the October highs, we're still right in that choppy range. So nothing's overall doing besides these short term. Could we retest these September highs? I mean, the October highs, yes. Natty gas, lots of volatility here. Filled the gap. As long as this holds the rotation zone, watching for still up moves in that. Gold, by the way, Gold, we've hit the first stop reduction target on the double. It took a while to play out. It was never invalidated. Talked about that on Tuesday also, hitting the first target and up against the top of this little. It could turn into a channeling double, but at least we get to raise a stop on that to 21.5 on a closing basis. That'd be the farthest away because that's the only thing that invalidates a stop. So again, this is a short-term thing only. What would turn it into potentially a longer-term thing? So overall, we've been in corrective mode. I was watching for corrective mode into January. We're in January now. And so far it's been on the macro pattern in gold, a sideways, sort of a pullback, more of a pullback, but sideways correction. Really, if you look, it's still within the range of November on a monthly basis. So I really have to label this more of just a sideways correction to burn off the very overbought condition and get back to cycle lows. So I'm now watching for potentially more bullish plays in gold. Now, the final target on this little double is right at that 50% harmonic. And then if it follows through and can close above 2699.6, so 2700, that could be something that could be turning into a more longer term play. Silver, little bounces here, by the way. We have the double bottom and silver trading above Tuesday's highs, which is a percent beat buy. So as long as this closes above there, that could be a potential front run for silver to the double. Has to close above here again. I'm not giving trading recommendations, just showing you things I'm watching for. But if I was going to trade that with a percent beat buy, the first key area I'd watch for is a continued close above $30 because that's the 6.5 of this retracement. Why would I be looking at that? Because if it closes above that, that then shifts the probabilities to retest the high area from the 26th to the 27th, and then could potentially trigger the double. The one I would not touch from the bullish side is copper. Is there a little mini pattern? Yes, there's a little mini double bottom, but that's going straight in a very key resistance of a breakdown zone. I doubt this will trigger. That's the only thing. I'd play the silver or gold ones well before the copper ones. Why? Because copper broke very key resistance, and copper may never trigger. The yen, by the way, this potential double is off the table. Currencies aren't really that exciting right now. Yen's still watching for the reconnection with that 159.15 area. So just, again, trading against some pretty key support right here. So that's what I'm watching right there. If it does dip below it, as long as it doesn't close back below the rotation zone, I'm watching for rotation plays up. Euro, after, again, nearly hitting that first target against the rotation zone, rotating down. That's why I tell you, you got to be cautious going against the rotation zone with doubles. The next targets in the euro are 102.94 and then 102.57 based off the harmonics. But the euro lower, we've already talked about this on the macro level. I'm watching for, especially if the euro falls through with a close in the next little couple weeks below 101.88. I'm watching for a potential retest of the lows from October 22. Remember, we talked about the dollar index with a potential retest of the highs of 22. Well, the euro could easily retest those lows. But the euro has to break down and close below 101.88. By the way, pound also short-term breakdown, but there's still some pretty key resistance below. Spiders on here, still watching with the close based off of Monday. Hold on. With the close based off of Monday and Tuesday, watching still for 583.61. Key resistance I'm looking at right now is 591.70, And then if we do get above there, the next key level will be the gap fill of 595.01. Other than that, I'll be watching for, again, just like in the futures, what rollover plays, unless we get a ton of strength and a very strong tick coming in. All right, you do have, it's a little sloppy in here, but we do have a little mini double bottom potentially. It looks good on the 1 hour. So that would be the only thing I'll be watching again, but that is against the rotation zone. So you have to stay nimble if you're trying to trade something like that. And it would need to follow through a close above that 591.69. I already talked about 591.70 being that very key level. The Qs already tagging out that 87.5 on the Qs. So right now, the key levels on the Qs, the very key level is 520.50, and then you have a gap fill to the upside, 522.56. Other than that, we'll be watching for rollover plays unless the Qs can get on a closing basis above 527.95. And the Qs barely trying to hold the 50, which was very key support back in October. Bitcoin, which Bitcoin, for some reason, is giving dark screen sleep constipation. Bitcoin confirming but not triggering the head and shoulders. Not triggered. It's confirmed but not triggered. Again, on a weekly basis, we're right against the top of the weekly rotation zone. What would be interesting from the bullish perspective is if we close back above last week's high this week. That would be a weekly %B buy, and we could be setting up an even stronger topping pattern. But if we don't follow through with a close above last week's high and then a follow through next week above 101.969, we'll be continuing to watch for rollover plays. Speaking of that, that chart's not looking good. Micro strategy, the leveraged Bitcoin play. I'm still expecting, even on bounce plays, for this to reconnect with the 200. So would not be dipping my toe in that from the bullish side. Tesla missing on deliveries and back on Tuesday closing below the rotation zone. So what are the next key targets? What are the next key targets? The real key would be the 37.5 harmonic to about the 50 EMA, so about 560 area. Where does that take us? That takes us back into the weekly rotation zone, with weekly cycles still heading down. Rich's Bitcoin long-term target is 300K. Okay. So that's what Rich thinks. We shall see. NVIDIA, and this is not invalidated. This really sloppy head and shoulders. But it looks like a lot of the money is still going back into, even as this morning, into Broadcom. Little gap up there. We still have a potential double top. This is the one I'm really watching at this point. Yeah, I'm keeping an eye on NVIDIA because of the huge market cap of this thing. And if it really continues to break down, the probabilities say it should continue lower and at least reconnect with the 200. And if that happens, we'll see continued markets weakness. But I'm also now watching, I should put this in the watch list. I'm going to put it in the watch list right now. I'm going to put that right there. Take this guy to the top because it is very, very key there. Because if this does trigger before it gets invalidated, and even on another bounce, it's not yet invalidated. It get a little sloppier, but if this were to trigger, it could potentially fill the gap from earnings, putting some significant weight down on the markets. All right, what else? Apple was red this morning. Apple was red. I'm paying attention to Apple with the daily rotation zone. This 2-4. This let me adjust this. I don't know how that got off. Let me do this. Let me do this. Because Apple closing below the 62.5, still in the rotation zone, but the probabilities of shift on Apple with a reconnect at least at 247.49, and that would close it below possibly this very, very significant support base, right at the 87.5 harmonic, and lose the daily rotation zone. And Apple is still very overextended. So we could see with cycles of weekly top, we could continue to see an Apple pullback. Again, some of these mega caps, the chart patterns aren't good. They're not strong. If we do get a bounce here, we could also be setting up a head and shoulders top. Happy New Year, Eric. Tesla's giving you major heartburn. Sorry to hear that, Michael. Thank you for coming in on the chat. Why is Tesla giving you heartburn? It's very overextended after the post-Trump win run-up. It's not financially warranting these numbers, and missed on deliveries. So at this point on any rallies, because it still is an upward bias, I'd be watching for, at least I wouldn't be super, super bullish unless it was a day trade only. You're welcome, Anissa. Again, I'm going to wrap it. Let's just take a look how this opened with the tick and everything. I'm curious. Again, don't force trading right now during the holidays. All right, wow. Wow. Super strong tick opening. But again, first day of the year, thinner markets, 1427. Wow. So what does that mean in terms of this? Going to be watching to see if we hold this very key area. But in order for me, from an intraday basis, which I don't recommend for, we've got to then get above. If this spike little low holds, it's got to get above this 59.80 level, then follow through above 59.86. Those will be the two key things I'm watching post open. All right. With that, I shall be back tomorrow to wrap up the first official trading week of 2025. I hope everyone has a wonderful day and a wonderful, peaceful, and prosperous new year. See you all tomorrow. Bye for now.